When we talk about companies that have transformed not just how we shop, but how we think about logistics, cloud computing, and artificial intelligence, Amazon.com Incorporated stands tall. Founded in 1994 by Jeff Bezos, Amazon started as an online bookstore and has since grown into one of the world's most valuable companies. This transformation didn't happen overnight. It's the result of bold vision, aggressive expansion, strategic reinvestment, and technological innovation. As of 2025, Amazon is not just a retailer, it's a global ecosystem. From my personal perspective, investing in Amazon is like placing a bet on the future of digital infrastructure. The company's diverse operations, including AWS, Amazon Web Services, Prime, advertising, and logistics, make it a unique player. But before deciding whether to buy Amazon stock, let's take a close look at the core financial metrics that can help guide this decision. Earnings per share, EPS. EPS is a critical metric that tells us how profitable a company is on a per-share basis. As of 2025, Amazon's trailing 12-month EPS stands at approximately $6.27. This figure has grown significantly from the years during and immediately following the pandemic, indicating stronger operational performance and improved margins. Price-to-earnings, PE, ratio. The PE ratio of Amazon currently sits around 32. This may seem high compared to traditional retailers, but Amazon isn't a traditional retailer. High growth expectations and consistent reinvestment into core businesses justify this valuation to many investors. Revenue. Amazon reported $155.7 billion in revenue in Q1 2025 alone. Annual revenue is expected to exceed $650 billion. These numbers are staggering and speak to Amazon's ability to generate top-line growth across multiple sectors including e-commerce, cloud, and streaming. Net income. The net income for the trailing 12 months is approximately $66 billion. This profitability is supported by AWS, which continues to be Amazon's most profitable segment. It also shows the company's ability to convert revenue into meaningful earnings. Dividend yield. Amazon does not pay a dividend. Instead, it prefers to reinvest profits into growth. While this might deter dividend-focused investors, it aligns with Amazon's long-term strategy. Debt-to-equity ratio. Amazon's current debt-to-equity ratio is around 0.17. This indicates a conservative approach to debt and strong financial health. The company has always maintained a balanced capital structure, allowing it to weather downturns effectively. Current ratio. A current ratio of 1.05 suggests that Amazon has enough short-term assets to cover its liabilities. While not extremely high, it reflects stability in working capital management. Free cash flow. Amazon's free cash flow, adjusted for equipment finance leases, is around $36.2 billion. This is critical because it represents the cash available after capital expenditures, cash that can be used for expansion, acquisitions, or share repurchases. Revenue growth. With a year-over-year revenue growth rate of approximately 10%, Amazon continues to expand. This growth is supported by global e-commerce sales, cloud infrastructure, and digital advertising. Earnings growth. Amazon's earnings grew from $2.95 in 2023 to $5.66 in 2024, a 92% increase. This shows the company is not just growing its top line but also managing costs and improving margins. Market cap. As of May 2025, Amazon's market capitalization is approximately $2.13 trillion. This makes it one of the top 5 most valuable companies in the world, reflecting investor confidence and market dominance. Price-to-book (PB) ratio. Amazon's PB ratio is around 7. This high number reflects intangible assets such as brand value, proprietary technology, and goodwill, factors that aren't easily quantified but are key to Amazon's valuation. PEG ratio. The PEG ratio, which adjusts the PE ratio for growth, is 1.82. Anything below 2 is generally considered acceptable for growth stocks. This suggests that Amazon is still reasonably valued given its growth trajectory. Beta. Amazon has a beta of 1.43, meaning it is more volatile than the market. This higher beta reflects the stock's sensitivity to macroeconomic changes and investor sentiment. 52-week high/low. The stock has traded between $151.61 and $242.52 over the past 12 months. Such a wide range indicates the level of market sentiment and opportunity for traders and long-term investors alike. In my view, Amazon remains one of the most compelling long-term investments on the market. Its ability to generate consistent growth in both revenue and earnings, along with a rock-solid balance sheet, makes it a relatively safe pick for growth-oriented investors. Yes, the stock isn't cheap, but you're paying a premium for quality and innovation. I also admire how Amazon continues to push the boundaries, whether it's through drone delivery, AI-powered logistics, or global expansion. These aren't just buzzwords, they are the foundation for the company's next phase of growth. Of course, no investment is without risk. Regulatory scrutiny, labor challenges, and macroeconomic pressures could impact performance. But Amazon's diversified revenue streams and its relentless focus on innovation position it well to manage these risks. In conclusion, for those looking to invest in a company that embodies resilience, innovation, and global reach, Amazon.com Incorporated is hard to overlook. The numbers back it up. And the vision propels it forward. Whether you're a seasoned investor or just starting out, Amazon deserves a serious look in your portfolio.